private equity is really a place that we're going to see sort of long-term steady growth, because there's a lot of capital that is deployed against this sector, and I expect will continue to be deployed in this sector. Business cases in the 80s and 90s for PE firms were very different. You could count on multiple expansion, you could count on financial engineering and getting the leverage right to create a lot of value. Going forward, we see about 60% of the value creation is going to be through operational levers. So we mean, how do you grow the company? How do you change the cost structure of the company? How do you change its position so that it will compete and be stronger in its industry? First of all, portfolio companies have looked to get additional outside help. That may be from private equity firms building infrastructure and sending out SWAT teams, often very focused on short-term improvements such as sales force effectiveness or procurement that can really bring dollars to the bottom line. So private equity firms do have some challenges. One of those is actually public perception. Even though risk-adjusted rates of return are really in line with other types of financial investments, private equity hits the front page of the paper, and the public perception is that a few people have become very rich out of private equity. The truth is the returns are quite dispersed and really all over the board. The best firms do pretty well consistently, and the more challenged ones are challenged consistently. Tied with that is actually, is there any kind of legislative risk? Is the government going to do something to impair private equity? And I think that's still sort of a question mark, and may even depend on what administration in the U.S. is currently in power. If you're a private equity firm, you have to sort of think about, are you going to stick to your knitting as doing investing? Or are you going to grow infrastructure quite a bit in order to become more of an operations-focused group? And that's a big question mark, because you add a lot of SG&A, and you add SG&A that sometimes doesn't pay back overnight. And so I think that's an open question for all the PE firms.